So your business looks profitable and your P&L says you're winning, but your bank account isn't telling that story. It's empty and you're wondering, how can you be profitable and still be struggling to find cash all at the same time? I see this with all types of project-focused businesses. They're running creative studios, AV integration companies, construction firms, and these are businesses that live and die by the projects that they're on. On paper, the numbers look amazing. They're great, but in real life, the cash just isn't there. So today, I'm going to show you why that happens, what it means for your business, and a simple framework you can use to get ahead of the cash flow issues, to finally see your cash clearly and start making decisions with confidence. Let's dive in. So here's the problem. Too many business owners think that profit and cash are the same thing. They're not. And that's where they get blindsided. Profit is really just an accounting concept. It's actually just qualified revenue minus qualified expenses. And all it does is tell you what's left over on paper after your accountant, bookkeeper, or whatever does all the categorization. Cash is different. Cash is what you actually see in your bank account, and cash flow is how it actually got there and how it actually is going to leave. What's unique about cash flow is that it includes every inflow and every outflow, even if they don't actually qualify as revenue or as traditional expenses. So that means you have transactions like asset and equipment purchases, debt purchases from your credit cards, or owner investments and distributions. All of these are going to move cash, but don't necessarily impact the profits the way that you expect them to. Let me give you an example that can illustrate one of these scenarios. Let's say you're organizing a concert. Your profit is like you selling the tickets. Revenue is going to be recognized when it's sold, but cash is going to depend on other factors that affect the timing on when it actually hits your bank account. So if the ticketing platform is going to pay you 2 weeks later, those profits are recognized today, but the cash isn't going to hit until much later. On the flip side, let's say you collected deposits months in advance before the event. The cash is recognized early, but the profit isn't going to be recognized until the show actually happens in the future. So this is the same event, but two different timelines, two different impacts on cash and profits. And that's the point. In certain scenarios, profit and cash don't move together, and oftentimes they will never be in sync. And if you don't understand this fundamental accounting concept, your expectations whenever you look at your numbers are going to consistently be off. And you might find yourself thinking that you're profitable and still be blindsided by an empty bank account. Now let's talk about how you can actually fix this issue, because you want more visibility and control over your cash. Step one is to identify all transactions that are going to affect cash and not just profits. You have to be aware of the distinct difference because transactions affect them differently. Some transactions hit profit and cash at the same time. Some transactions don't affect cash at all. Some transactions hit profit first and then cash later. With every transaction and business move you make, you have to review and judge each one properly. So your equipment purchases, your credit card swipe, your owner distributions and investments, these don't move profit the way that they move cash, and the difference can be quite significant depending on contract terms. Until you're comfortable with the difference between cash and profits and you come to terms with that difference, you'll never have the clarity that you're actually looking for whenever you look at your numbers. Step two is to plot the timing of all your cash inflows and outflows starting with next week. So I want you to look ahead to next week and ask yourself, what cash do I realistically expect to receive next week? And what payments am I actually going to pay out of my bank account next week? And I'm not talking about those charges that you're swiping on your credit cards or those IOUs. These are actual movements that are going in and out of your bank account. And when you plot them for next week and set that expectation, you have to be realistic. If a client usually pays you 3 days late, you need to add a 3-day delay to your expectation. And if a vendor on your agreements expects to be paid immediately, then go ahead and just note that you're going to pay them quickly. The goal here isn't to make your cash flow timing ideal and amazing. It's really just to establish visibility. We're going for realistic, not for ideals. Once you've gotten next week mapped out, we can go to step 3, which is to rinse and repeat step 2 week by week until you're looking 3 months ahead. This is what we call your 13-week cash flow forecast. Pretty simple. While working on your forecast, plotting your cash week to week, I want you to keep this in mind. Start first with the things you absolutely know, those inflows and outflows that are absolutely certain. Then you can go back and layer in all of those uncertain ones, the ones that require a bit more judgment. When dealing with the ones that require judgment, I want you to take a conservative approach. A conservative approach is going to protect you in the future. If you need any help with this process, identifying the cash transactions, plotting the cash flow next week, and developing that 13-week forecast, I've created a cash flow forecast template that you can download right now. It's in the description, and I'm sure it can help you get started. If you want more hands-on help from an experienced team of CFOs, you can book a call with our team. The link is also below. Okay, so we've established that profits are great and they're what we really want, but if you don't have cash readily available, your profits don't matter. Every business needs cash to survive the next day, and without it, you might not be one of them. When you take the time to forecast your cash in this way, you not only get the visibility, but now you have the ability to use tactics to your advantage. You can stretch your cash and you can extend the life of your business. For example, let's say you're in a position where you know cash is going to be low next month. So now that you know what's going to happen, you can effectively explore your options. Maybe you decide to delay your next full credit card payment. Maybe you go down to the minimum balance, even if it means paying a bit of interest just to preserve your cash flow. Maybe you follow up on all of your overdue invoices more aggressively because you know cash is going to run out soon. You might even consider partnering with a collections agency to help nudge your clients or significantly change your payment terms. Maybe you decide to sell some short-term investments just to increase your cash position today. There are so many tactics you can deploy depending on the circumstance, but there's no way you'll know what to do if you lack visibility. And cash flow forecasting is your key to seeing the future. Cash flow forecasting isn't about making the numbers pretty, it's about survival and control. The cash tells you how long you can keep going and what capacity you have in your business to make the next move. And most importantly, it reveals one of the most important metrics you need to know, your cash zero date. This is the day you're going to run out of money. That date matters. More importantly, is more significant than your profit because, as we know, if your cash goes to zero, it doesn't matter what your P&L says. A profitable business with no cash can still go bankrupt. Okay, so what have we learned? Profit is important, but profit and cash are not the same thing. Profit is an accounting concept and cash is what your business actually runs on. The misunderstanding of the movement of these two things blindsides most business owners. To get ahead of the issue, step one is to identify all the transactions that move cash and those that don't. Step two is to plot the timing of your cash inflows and outflows realistically coming next week. And step three is to rinse and repeat step two week by week out to 13 weeks so you always know how long your cash will last before you actually hit zero. When you do this, you're going to be so much better managing your business. You're going to stop responding to surprises and you're going to finally be able to make those financial decisions before the financial crisis hits. Whether that's adjusting your payments, chasing invoices, or restructuring terms, you're going to be so much more powerful. Forecasting your cash doesn't just protect your business, it gives you control and confidence to make the right calls at the right time. And if any of what I've said resonates with you, I want you to do me a favor. Like and share this video because on this channel, I share financial management strategies for project-focused business owners who want to scale with better financial control and clarity. All right, thanks. I'll see you on the next one.